here from Sands & Associates. Interesting time. We were saying tax deadline to pay those taxes April 30th of the year. But what happens if we are in the situation where we've got that tax liability, but we just can't pay it back right now? Where's the first place to start when we're managing this whole finance?
Well, it's a scary situation for sure. You know, number one thing is don't ignore the problem. Okay, if you owe money to your friend, you know, maybe you can hide from them a little bit, make it a bit difficult to find you. You can't do that with the tax man. Okay, CRA, if you owe them money and they have trouble getting payments from you, they can go direct to your employer. They can take up to 30% of your wages. They can go to your bank account, freeze your bank account. They can do all of these remedies that another creditor doesn't have, and they don't need to go to court first. They got extra powers.
And there's interest payments too if you're ignoring the liabilities you have that can go many years back, right?
Oh yeah, interest, penalties. It can be multiples of what you actually owed.
So if you're facing the problem head on, I mean, that's one. But two, also the idea of filing for the years. I mean, if we're just getting up to speed, there may be some years we missed along the way.
Yeah, the worst thing you can be to Canada Revenue Agency is a non-filer. They don't look kindly at somebody who just doesn't file a return. Even if it's bad news, you got to file that return. If you don't give them any information, they're going to make something up. Essentially, it's called an arbitrary assessment, and what it means is they're going to look at every dollar that came into your bank account. They're going to say that's income, and you're going to owe a massive amount of tax that you probably wouldn't have owed if you had filed the return correctly.
Okay, RSP, say if we're looking at all of our assets and thinking, okay, if we have this liability when we need to pay things back, how sound is it to go and dip into the RSPs to do this?
Almost always it's a huge mistake. So at Sands & Associates, we meet with people who have a big tax problem, and sometimes they've actually cashed in a bunch of RRSPs, which they didn't have to do. So RRSPs are a federally protected asset. Not even the tax man can make you go and cash in your RRSPs to pay the debt. And usually if you cash in the RRSPs, first off, it's often not enough to clear the debt, so you still got a problem. But also, you're building up a tax liability for next year because you have to count that money as income when you take it out of RRSPs. So you might be compounding the problem and taking away your retirement, which you actually probably really need when you do retire.
So short-term gain and not necessarily a gain in the long term.
Yeah.
And then finally, if you're experiencing this and the debt is simply too high, what are options of filing a proposal and sending out a plan for paying this back? Yeah,
a lot of people think there's nothing you can do if you owe tax debt to Canada Revenue Agency. You're going to owe that money until you pay it off, or until you die, essentially. Basically, you can do what's called a consumer proposal. Okay, it's the only way you can make a deal on the taxes that you owe. It's only available through a licensed trustee, and what happens is you offer, usually it's 30 to 50% of the money that you owe, payable over 5 years. All of the interest stops, all of the creditor's remedy stops, and you get the time you need to pay off what you can afford to pay off. So if you got a big problem, look into filing a consumer proposal, meet with a trustee to see if it's an option for you.
And yeah, what's the main criteria for that if somebody's watching this thinking, hey, that's the direction they want to go for being eligible for that option?
Well, what you need to be is what's called insolvent. What it means is that you don't have enough assets to pay your debt. So if you got $1 million house and you owe $10,000 on taxes, you're probably not going to be able to do a proposal. But if your house is fully mortgaged, you're just struggling to make ends meet, and you've got, you know, $10,000, $20,000 of a tax bill, you'd probably be a great candidate for a consumer proposal. It's a win-win. Everybody wants you to get back on your feet, be a productive member of society, pay your taxes, but if you need to get caught up, a consumer proposal can do that for you.
Good baseline right there. Again, Blair here from Sands & Associates. Always great tips you throw away to help us get ready, and April 30th, that's the big tax deadline,
That's
right?
the deadline, yeah.
All right, we'll get it in there just in time. Thanks so much for